everyone, this is Roger Scott from Market Geeks, and I have a new video tutorial for you today. Before I begin, I'd like to remind you to visit marketgeeks.com and download your free swing trading report. Today, I want to discuss a few different day trading chart patterns that beginners should focus on when they first start out day trading. Many traders start out with what I call indicator fascination and delve into advanced technical analysis methods that can confuse them and oftentimes discourage them from continuing trading. When I started out trading, I was under the impression that the more difficult trading methods would produce bigger winners or higher probability of winning trades. I purchased several books and magazines that discussed Gann lines, geometric calculations, and Elliott wave principles that required a PhD in physics to understand correctly. It goes without saying, but I can promise you that the only thing I learned from following these methods was to stay away from them as far as possible. The most fundamental mistake beginners make is beginning their search for chart patterns using intraday time frame. I always encourage traders to begin their analysis with daily time frame and then move on to intraday time frame when they're actually getting ready to enter the market. While there are some markets such as E-mini S&P futures and Forex markets that you can begin analyzing using hourly or shorter time frame, for the most part, most financial instruments respond best to daily chart analysis when you're first starting out. You can see in this example, I'm looking at a symmetrical chart pattern setting up. I want to wait for the initial breakout to occur so that I can day trade if the stock continues momentum after the breakout. Usually, after a tight symmetrical triangle, the stock is very wound up and is ready for strong momentum that should last from 2 to 5 days. You can see the actual entry in this example. Notice I completely relied on the daily chart for my analysis, entry and exit. I do watch the intraday chart while I'm in the trade, but I mostly focus on the daily chart to make sure the pattern is developing correctly. In this case, the triangle breakout continued upwards and closed near the high of the day. I would use a simple MOC, that's market on close order, to liquidate the position at the end of the day. What I like about triangles is the inherently limited risk due to lack of volatility while the pattern is setting up. This is one of the reasons why triangles are good low-risk, high-reward patterns for beginners. The next low-risk day trading chart pattern I want to show you is the bullish flag pattern. This is similar to the triangle pattern, but has a slightly wider channel range and typically slopes down a bit more. Notice the risk level is equal to the size of the bars that make up the flag. I would look for a strong breakout outside of the flag for an upside entry. Flags are congestion patterns that tend to explode with good momentum once the congestion phase comes to an end. You can see the entire sequence in this example. Notice how low the risk level can be when the bars before the breakout are consolidating and have a tight trading range. These are the type of patterns you want to isolate for day trading. The risk is very small compared to the profit potential, and because you're entering right after the consolidation stage, the market is primed for volatility. The profit on the trade was close to $3 and the risk level was close to $1. Unfortunately, day trading does not provide opportunity for huge profits because you are limited to how much time your positions have time to develop. You should look for setups that provide you with 2-to-1 risk opportunity at minimum. Start day trading with simple patterns that make sense. Avoid difficult mathematical formulas or calculations that involve geometry or statistics. Look for opportunities that provide high potential reward and low risk so that the size of the winners is at least twice the size of your losers. In day trading, the profit potential is limited because the market is only open for a limited amount of time. You need to maximize your profit potential by picking simple trading patterns that make sense. Thanks for joining us for today's video tutorial. Don't forget to visit marketgeeks.com to download your free swing trading report today. This is Roger Scott wishing you the best in your trading.